Corporate buybacks are at the lowest level since records began. We're going to dive into whether this is significant or not. And Goldman say that the only scenario that CTAs, commodity trading advisors, are facing over the next week is S&P 500 selling. We're going to see what the relevance of this is. And then the trading takeout today is going to be on insider dealing, but not that kind of insider dealing. We're going to find out what I'm talking about as well. Now, the only way you can get the best trading insights, education, and analysis each day is if you're here every day. So hit subscribe so you can get your daily trading edge. So the first point, global corporate buyback announcements are at the lowest level since records began. These records are kept by Wall Street Horizon, which I believe is a trading name of a specific data company. But you can see there that there's kind of a correlation between corporate buybacks and interest rates. So we're at the highest level of interest rates in 20 odd years, and corporate buybacks are at the lowest point. However, I like to look at things like this and see that the only way is up, sort of. And why are corporate buybacks important? Well, firms tend to buy back their shares to reduce their cost of capital, but that's only really good in a low interest rate environment. Otherwise it's relatively expensive to do so. Now, corporate buybacks tend to support the share price as well. And we're going to go on to something else in a second with regards to CTAs selling the S&P 500. But corporate buybacks are important in this context because it's removing one of the key facets that has supported equities for quite a while. I hate being bearish equities, but everything is pointing currently to being bearish equities, unfortunately. And whenever I think of being bearish equities, I don't mean sell or short, if you like, the S&P 500 or anything. It tends to be just let's reduce some exposure, because it's always good to be pro-humanity and stay long on equities, in my view. But in this case, there is a key support that looks like it is being removed, and you can see that it's well below the moving average as well that's indicated there. So there's two ways to look at this. One, that the equity support has gone and we've not seen the concurrent move in equities yet. We're still relatively high. But two, that the only way is back up, and that comes if interest rates come back down again. So there's two ways to look at this depending on your time frame. There's a positive you can take from it, but there's also the shorter term negative. So, do your best to figure out what fits your perspective on this. Some people might have a different trading time frame to others. Now, what I mean by longer term in this instance is probably over a year. Shorter term is probably a month to 3 months. So that's the kind of horizons we're operating on here. And maybe even longer than a year, actually, probably further out than a year, because I think interest rate cuts won't actually start to kick in until maybe Q3. Perhaps if things really hit the fan, then Q2, but I don't think we'll see anything before then. So that's the way that I'm looking at buyback announcements here. There's a positive to take from it, but shorter term negative in my view. Now, this chart is from Goldman Sachs, and it is showing which direction commodity trading advisors, who tend to be very, trend following, which direction they want to take the S&P 500 via the ES, so the E-mini futures contract, over the next week. It's not looking too pretty. This is Goldman's estimates, but Goldman do tend to know quite a lot, especially in the short term. And they look at things like, the futures market, they look at options pricing, they look at volatility, all of these kind of things to come to a decision as to what the CTAs might be doing. CTAs do move the market around a fair amount. They are very much trend following, and they've probably done a bulk of the recent move to the upside. The reason that move happened is because volatility was basically overpriced going into the last FOMC interest rate decision. And then when it came out, that it was it kind of dovish, a little bit dovish, and then we had the CPI, it just went haywire. So all of that volatility got absolutely slammed, which let the market go upwards. Now the market's gone upwards almost parabolically, right? So this is probably partly where Goldman are coming to their decision from. You can see from the yellow and the orange line that it looks like they want to actually shed quite a lot off. Now, the orange line is 1 standard deviation down, and the yellow line is 2 standard deviations down. But the key bit here is that their estimates are not bullish in any scenario. So they're expecting a down move. In any case, it depends on the extent of said down move. So the extent of intent behind the selling, if that makes sense. Which, if we were to look at the ES right now, you can probably argue that they might actually have a point. So if I put on the daily chart, I'll share this tab. Let me get rid of this bit. You can see that this is actually from a previous chart I'd drawn, which was the linear regression. You can see that we go from this top here to this top. Now, this is 2 standard deviations away from the mean, okay, which is currently, and this is when I was referring to how to draw trend lines objectively, which is currently also where they've released this piece about equities dropping. So perhaps this will prove the thesis that you can draw trend lines more objectively. But the overriding point here is that Goldman are predicting in any scenario for equities to start dropping over the next week. So we've got to be paying attention to going into the end of the week and any data next week that might be, high importance, high volatility, anything like this. So let me just pull up News Corp very, very quickly and jump on to see if there's any data today, and then we can follow it up tomorrow with this same theme. So we have initial jobless claims today. There's nothing today, so I wouldn't expect any broad moves today. If we go on to the 23rd, let's have a look. If we go on to the 23rd, is there anything? Nothing tomorrow. Could we have a Black Friday? Are there any key events then? In fact, no. So there's nothing this week that I think would drive that move. If we were to look maybe at next week, let's go to the 27th. Still nothing really. It's obviously the holiday, actually, isn't it? That could be a driver, in fact. That could be a driver. I totally forgot about that. So the fact that they might want to level off positions going into tomorrow could mean, because tomorrow's Thanksgiving, could mean that the market actually does indeed come off today. Bear that in mind, because it's a long holiday. So do bear this in mind, okay? And this is very, very important to know and understand that going into Thanksgiving, the market could come off. Now, what I will try and do is I'll try and get a message across with any data after this video to see if there's been previous instances of the market, capitulating on a Thanksgiving and ruining everyone's Thanksgiving holiday. I don't know if it will, obviously, but let's see. Let's talk insider trading. And no, I don't mean, the illegal sense. I mean, what happens when executives of listed companies buy or sell their shares, and how you can view this activity. So if you go onto the NASDAQ.com site, or just Google NASDAQ insider activity, you can view what the executives at all of these companies are doing. And the most important ones naturally are going to be the Magnificent Seven, purely because they're the largest. They move the market around the most. So just recently, the general counsel of Apple had sold their shares in Apple, basically the full amount. So I'm just trying to find the exact listing here. So Catherine Adams dumped her entire Apple stake for a total value of 23.3 million. And this was on the 16th. So I don't even think this has come up yet. No, it's not even there yet. So she's dumped her entire stake, the lawyer of Apple, which, it might just be her wanting to leave, might just be, it could even be just a scheduled sell, but a scheduled sell at that amount is a bit too much. So the trading takeout from today is effectively, you can see when the executives are being positive or negative about their company. And when you see a full sale of shares, I would be kind of a little bit critical as to where the overall market is going, especially when it's a company the size of Apple that's doing it. When you then take into account the previous bits of information we've spoken about today, corporate buybacks being exceptionally low, and Goldman suggesting that over the next week, equities are going to be sold off, then you can start putting a bit of a sentiment cloud brainstorm together.